A registered practical nurse in Thunder Bay, Ontario files her tax return in March. She earns $71,000 per year. She works overtime regularly. She has a small side income from occasional private care shifts she books independently, approximately $8,400 in the most recent year. She has been reporting that income correctly on her T1 return every year since she started taking those shifts. She deducts the supplies she purchases for those shifts, gloves, masks, disposables, and a portion of her cell phone bill, which she uses to coordinate bookings with clients. Total deductions against her self-employment income, $1,840. She has done this for 4 years. Nothing unusual has ever happened. Then in October, 7 months after she filed, she receives a notice of reassessment in the mail. The CRA has reviewed her return. They have disallowed her self-employment deductions in their entirety, all $1,840. The reason given on the notice is 4 words: insufficient documentation provided to substantiate. She has never been contacted by CRA before this notice. She has not been asked for documentation. She has not been given the opportunity to provide receipts, which she has. She does not file an objection. She pays the $756 because the amount is not worth the stress. She calls the number on the notice. She waits 41 minutes. She speaks to a CRA agent who explains the reassessment and tells her that if she disagrees, she can file an objection. The agent is professional. The agent does not explain what an objection is, how to file one, or what the deadline is. She does not file an objection. She pays the $756 because the amount is not worth the stress, because she does not know her rights, and because nobody in the process has any financial interest in explaining them to her. For years later, she will take the same private care shifts, buy the same supplies, and file the same deductions. She will not know that her failure to dispute the 2021 reassessment set a precedent that made the 2025 reassessment significantly harder to win. That is not a complicated tax situation. That is the system. To understand why, you have to understand the framework Parliament intended. Canada's income tax system is a self-assessment system. That principle has been at the core since 1972. You report your income. You calculate your tax. You file your return. CRA reviews what you filed. The self-assessment principle creates an inherent tension. The taxpayer knows the facts. CRA reviews with limited information. When CRA concludes there's an error, an overclaimed deduction, or missed income, they issue a reassessment. A reassessment is CRA's determination. It is not a court judgment. It is not a final legal determination. It is CRA's position. Parliament recognized that CRA's position would sometimes be wrong, that auditors would sometimes misunderstand deductions. In a system processing tens of millions of returns annually, errors would occur, and that those errors would systematically disadvantage taxpayers unless there was an accessible mechanism to correct them. That mechanism is the objection process, codified in Section 165 of the Income Tax Act, available to every Canadian taxpayer, free to access, capable of reversing a reassessment entirely. For decades, the objection process was accessible. Revenue Canada had resources to process objections within a reasonable time. For decades, the objection process was an accessible part of the tax system. The Canada Revenue Agency, then Revenue Canada, had sufficient resources in its appeals division to process objections within a reasonable time. Taxpayers who filed objections received meaningful review. Many objections were resolved at the appeals officer level without ever going to court. The system worked adequately as a check on the assessment process. Then 2 things happened simultaneously that dismantled the practical accessibility of the system for most Canadians. The first was the dramatic increase in the volume and complexity of CRA reassessments. CRA's programs became significantly more sophisticated. Beginning in the mid-2000s and accelerating through the 2010s, CRA's computer matching programs became significantly more sophisticated. Third-party data from employers, financial institutions, real estate registries, provincial government databases was increasingly cross-referenced against filed returns automatically. The volume of reassessments issued increased substantially. Many of these automated reassessments were issued without any human review of the individual taxpayer's file. A return flagged by the matching system could generate a reassessment notice within weeks, without a CRA agent ever reviewing the underlying documentation. The second was the erosion of CRA's appeals resources. As reassessment volumes increased, the appeals division's capacity to process objections did not grow proportionally. Wait times for objection review extended from months to years. A taxpayer who filed a valid objection in 2019 might wait 3 years for a determination. The delay itself became a deterrent. Most taxpayers are not willing to carry a disputed tax debt on their file for 3 years while CRA processes the objection. Many paid rather than wait, which is precisely the outcome the delay produced, whether or not that was the intent. The objection right did not disappear. Section 165 is still in the Income Tax Act. The Tax Court of Canada is still available for taxpayers whose objections are denied. The taxpayer relief provisions, Section 220(3.1), are still available for taxpayers who missed deadlines for reasons beyond their control. The money is real. The entitlements are documented. And most Canadian taxpayers who receive a reassessment, they could successfully choose instead to pay. Today I am going to walk you through exactly what your rights are when you receive a notice of reassessment, and what happens when you know how to use them. Before you can dispute a reassessment, you have to understand what it is and what it is not. A notice of reassessment is a document issued by CRA under Section 152 of the Income Tax Act. It states CRA's revised calculation of your tax liability for a specific tax year. It identifies the changes CRA made to your filed return, deductions disallowed, income added, credits adjusted. It states the amount of additional tax owing or the revised refund resulting from those changes. And it states the deadline by which you must pay any amount owing to avoid further interest accumulation. Here is what a notice of reassessment is not. It is not a court order. It is not a final legal determination of what you owe. It is not the result of a hearing where you were represented and where evidence was weighed. It is CRA's position, issued unilaterally, often by automated process, sometimes without a human reviewer ever examining the specific facts of your file. CRA reassesses returns for many reasons. Automated matching. CRA receives T4 slips, T5 slips, T3 slips, and other information returns from employers and financial institutions. When the amounts on those slips do not match what you filed, an automated reassessment may be generated. Third-party audits. If CRA audits a business and determines the business paid you amounts you did not report as a contractor, a supplier, or an employee, they may reassess your return to include those amounts. Random review programs. CRA selects a percentage of returns for detailed review annually. Deductions that appear disproportionate to income, home office claims, business expenses, charitable donations are common triggers. Specific audit programs. CRA runs targeted audit programs on specific deduction categories. In recent years, these have included home office expenses, rental property deductions, cryptocurrency transactions, and employment expense claims. If your return falls within a targeted audit category, a reassessment can arrive regardless of whether you filed correctly. Matching to provincial data. CRA increasingly cross-references filed returns against provincial databases, property records, corporate registry filings, and in some provinces, benefit payment records. Discrepancies generate reassessments. In every one of these scenarios, the reassessment represents CRA's position based on the information they had at the time they issued it. Your documentation, the receipts, the contracts, the records that support your filed return may never have been reviewed. In many cases, CRA issues the reassessment first and expects the taxpayer to produce documentation in response. You have the right to respond. You have the right to produce that documentation. You have the right to dispute the reassessment formally if the documentation supports your filed position. That right has a deadline. It is the most important deadline in personal tax law. Section 165(1) of the Income Tax Act gives every taxpayer the right to file a notice of objection against any assessment or reassessment. Your objection deadline is the later of April 30th, 2024, 1 year from your filing deadline. January 13th, 2024, 90 days from October 15th, 2023. Now a different scenario. You file your 2019 return. Now a different scenario. You file your 2019 return. CRA issues a reassessment dated March 1st, 2023, nearly 3 years after your original assessment. Your objection deadline is the later of April 30th, 2021, 1 year from your 2019 filing deadline. May 30th, 2023, 90 days from March 1st, 2023. The later date is May 30th, 2023. You have 90 days from the reassessment date. No more. Calculate your deadline the day the notice arrives. Write it down. Set a calendar reminder. Do not assume you have more time than you do. What if you miss the deadline? There is a safety valve. Section 166.1 of the Income Tax Act allows a taxpayer to apply to CRA for an extension of time to file an objection. The application must be made within 1 year of the original objection deadline. The taxpayer must demonstrate that they had a bona fide intention to object within the deadline period, meaning they intended to dispute the reassessment, not that they simply forgot. CRA can grant the extension if it is just and equitable to do so. If the extension is denied, the taxpayer can apply to the Tax Court of Canada under Section 166.2 for an order extending the time. These applications are not guaranteed to succeed, but for a taxpayer who missed the deadline due to illness, a family emergency, or a reasonable misunderstanding of the process, they are worth pursuing. The correct approach is always to file within the original deadline. The extension mechanism exists for genuine exceptions, not as a substitute for the deadline itself. Filing a notice of objection is not complicated. It is a formal written document that states what you disagree with and why. It does not require a lawyer. It does not require an accountant. It requires that you clearly identify the reassessment you are disputing, the specific items you disagree with, and the facts and reasons that support your position. Method 1. File online through My CRA Account. Log in at canada.ca. Navigate to the Accounts and Payments section. Select File an Objection. Complete the online form. Identify the tax year, the reassessment date, the specific items being disputed, and your reason for disputing them. Attach supporting documentation, receipts, contracts, bank statements, employer letters, any records that substantiate your filed position. Submit. CRA confirms receipt and assigns the objection to the Appeals Division. This is the fastest method and creates a clear electronic record of submission. Method 2. File using Form T400A. Form T400A, Objection, Income Tax Act, is available free at canada.ca. Complete the form. Identify the tax year and reassessment date. Describe the items in dispute and your reasons. Attach supporting documentation. Mail to the Chief of Appeals at your local CRA tax center. Keep a copy of everything you send. Send by registered mail so you have proof of the mailing date. What to include in your objection. The specific line or lines on your return that CRA changed. The amount of the change. The reason CRA gave for the change, as stated on the reassessment notice or in any accompanying letter. Your position, what you believe the correct treatment is. The facts that support your position, specific, documented, precise. The documentation you are providing. List every attachment. The quality of your objection matters. A vague objection, I disagree with the reassessment, gives the appeals officer nothing to work with. A specific objection, CRA, disallowed $1,840 in self-employment expenses on line 22900. I am attaching 43 receipts totaling $1,427 for disposable medical supplies purchased for private nursing shifts, 12 months of cell phone statements showing a business use pattern, 12 months of cell phone statements showing a business use pattern, and a calculation supporting a 40% business use allocation of my monthly plan cost of $85. The total documented expenses are $1,840 as filed. Gives the appeals officer exactly what they need to make a determination in your favor. Do not file a bare objection and plan to provide documentation later. Provide everything you have at the time of filing. Filing the objection is the beginning. Understanding what comes next is what keeps most taxpayers from abandoning the process midway through. Step 1. Acknowledgement. CRA will send written acknowledgement that your objection has been received and assigned to the Appeals Division. This acknowledgement will include an objection number. Keep that number. It is how you track your file. Step 2. Appeals Officer Review. An appeals officer in CRA's Appeals Division is assigned to your file. This is a different part of CRA from the auditors and assessors who issued the reassessment. The Appeals Division is supposed to provide an independent review of the assessment. The appeals officer will review your objection, your documentation, and the basis for the original reassessment. They may contact you for additional information. They may contact your employer, financial institution, or other third parties for information relevant to the dispute. They will make a determination to allow the objection in full, to allow it in part, or to deny it. Wait times are long period. CRA's current objection processing times are running between 12 and 36 months for most personal income tax objections as of 2026. This is not a typo. 3 years is a realistic timeline for some objections. During this period, if the reassessment showed an amount owing, CRA can continue to charge arrears interest on the disputed amount, subject to a potential interest waiver if the objection is ultimately allowed. CRA's practice is generally to hold collection action on disputed amounts while the objection is being processed, provided the taxpayer notifies CRA that an objection has been filed. Collection should not be active while a valid objection is on file. If CRA attempts to collect while your objection is in process, contact the CRA collections line and reference your objection number. Step 3. The Notice of Confirmation or Reassessment. When the appeals officer completes their review, CRA issues either a Notice of Confirmation, confirming the original reassessment, or a new Notice of Reassessment, reflecting any changes made in your favor. If your objection is allowed in full, the reassessment is reversed and any excess paid is refunded with interest. If your objection is allowed in part, the amount owing is reduced to reflect the items accepted. If your objection is denied, confirmed, you have 90 days to appeal to the Tax Court of Canada. Most objections are resolved at the appeals officer level. A well-documented objection supported by clear receipts and a coherent factual explanation, for amounts in the range of hundreds to a few $1,000s, is frequently allowed without going further. But when the appeals officer confirms the reassessment and the taxpayer believes the determination is still wrong, the Tax Court of Canada is the next step. The tax court has 2 procedures for income tax appeals. Now, the informal procedure, available for cases where the amount of federal tax in dispute, not including interest and penalties, is $25,000 or less for any single tax year, or where the amount of a loss being disputed is $50,000 or less. This is the procedure most individual taxpayers will use. The informal procedure is designed to be accessible without a lawyer. The rules of evidence are relaxed compared to a formal court proceeding. The judge can assist the taxpayer in presenting their case. Filing fees are nominal, $100 for an appeal under the informal procedure. The hearing is in person at a tax court sitting location near the taxpayer or by video conference. The tax court sits in major Canadian cities: Toronto, Ottawa, Vancouver, Calgary, Edmonton, Winnipeg, Halifax, and others, and also travels to smaller centers on circuit. Then, the general procedure, for disputes exceeding the informal procedure threshold. This requires more formal pleadings. Legal representation is strongly recommended. Most individual taxpayers will not reach this procedure unless the amounts involved are substantial. For a taxpayer disputing a disallowed self-employment deduction of $1,840, like the nurse in Thunder Bay, the informal procedure is the correct pathway if the appeals officer denies the objection. The cost is $100 to file. Gather your documentation immediately today.